Welcome back, folks. This is our daily upload for August 6th, 2020. As a reminder, this is our last daily upload for the foreseeable future. We'll be returning back to our midweek review on Wednesday and the weekend review on either Friday or one day of the weekend, but I'm going to aim for Friday. All right, so we are looking at the dollar index on the left here. This is a 15-minute time frame. Now, obviously, the theme has been consolidation. Expect consolidation. And we've had the market drop down overnight, run short-term lows, previous day's low, ran back up, consolidated in the New York session, and sent it into consequent encroachment of the fair value gap here in the form of a SIBI, sell side imbalance, buy side inefficiency. And we came back down, touched the fair value gap discount level on the higher time frame chart. So again, these levels we've talked about extensively, and we basically we're seeing a continuation of that theme, consolidation, not a large move up, not a large move down, just consolidating. With that, we have seen the euro dollar, as you see here. Let me get this up. All right, so we have previous day's high taken, so buy side liquidity was swept, and here's the previous day's low. Now, when you're in consolidation, when you have one side of the daily range break either the previous day's high or the previous day's low, that's usually the end of the day. Like it's most likely, unless it's an outside day. An outside day would be a day that trades above the previous day's high and below the previous day's low. And as you can see, the intraday volatility here for the 6th for the euro. And let me get all this off. The initial leg up, this was during the London Open. Previous day's high, it breaks down, consolidates, runs lower into our BSI, buy side imbalance, sell side inefficiency, bullish order block, and then rallies back up, clearing relative equal highs, back to the fair value gap here, and leaving the high intact. So in essence, what we've done is we've taken out the previous day's high there. The previous day's low, while it still could likely run it, it's more likely to stay within the previous day's range. In other words, the low here. We breached this candle's high. Okay, so on the 6th we ran up, ran previous day's high. So with that done, we're most likely going to stay inside the range and not take out the previous day's low. If it was to go above this high and then go below previous day's low, that would create an outside day. An outside day is a range or day that trades above the previous day's high and below the previous day's low. When we're in consolidation, that's a less likely scenario. Now, if it does form, this is for your notes, if it does form and we open with a run above the previous day's high and go down below the previous day's low, and close near the low of the day, which is not what we're seeing here, but if that occurs, that's usually indicative of a short-term oversold environment. The market will likely trade higher the next day if that forms. In opposite terms, if we ran above the previous day's high second, in other words, if we initially take the previous day's low out and then trade above the previous day's high, if that were to occur and then we close near the high of the day, that would create a short-term overbought scenario, and then we would expect the very next trading session, day, not trade session, to be weaker. Okay. A little bit of a discussion on outside days, but we only had a consolidation with a run on the previous day's high, and since it did that, we give the opportunity for the market to trade down the previous day's low, but we really want to be banking a lot of the position in here. If you're short from here or going short in here, as you'll see in an example I did today. And you can see all the business here. Okay, so buy side imbalance, sell side inefficiency, bullish order block. We trade down into a rebalance and then come back up into this area here, which is a SIBI, sell side imbalance, buy side inefficiency. Right there. Okay, so inefficiency on the upside needs to be rebalanced with downside delivery. So selling was offered here, rebalancing this, then sent it higher to rebalance the sell side with buy side delivery. So between here and here, that's a trade, but I focused on this one here, working within the New York session, and never made it below the previous day's low and stayed in a tight consolidation day. You have to be very, very nimble, but it's possible. So let's go over to cable. All right, so here's cable. You can see it's a bit of a heart attack. There we are. So it's been back and forth, range bound consolidation. So again, it's very important that you understand that this is the nuts and bolts of the mentorship, explaining that these are the scenarios that and market environments that we're going to trade within. So it kind of like primes your expectation and what we should be seeing in the coming days, or at least the very next trading session, as it's been with these daily uploads. But we don't have that luxury anymore because ICT is pulling it back to what it normally is and as promised, which is a weekend review and a midweek review, and then charters get one video per month, and you all get what you get when you're in core content when you purchase the next month. Which, as a reminder, today is the 6th, so if you have not made your payment by this date here, when we open up the business day on the 10th, anyone that has not paid will be removed from the mentorship for non-payment per terms of use. So just as a reminder. So we have, again, a lot of consolidation in here. Nothing really doing in terms of directional bias. We had a little bit of a SIBI in here. It balanced that after taking relative equal lows out. It's just really, really tight consolidation. That in itself provides the opportunity for euro pound to decline. Remember, whenever we're in consolidation mode, the crosses are going to be the ones that have the movement. So we have consolidation here, and go back to euro real quick. Okay, and euro was allowed to decline. You see that? So we went lower on euro. Cable was consolidated, so that means euro pound is going to be allowed to decline or drop. So euro pound. There you go there. And you can see there it's the relative equal highs. Fair value gap. Bearish order block. Let me just mark it up for you, that way you guys can see it. I want to do all the work for you now. So we have Judas swing here, and right there, 15 minutes of 2 o'clock in the morning, New York time. Displacement, almost an immediate rebalance, and then sells off. Institutional order flow, entry drill, trades lower. Fair value gap, rally up, almost a complete rebalance there. And we're trading where we're at now and closing in fair value gap with the bullish up close candle, which is a bearish order block. Not to mean that that's a sell off, it just means that that's the target on the upside. So you can see the relationships of the crosses and market correlation. So euro was allowed to drop, cable was being held in consolidation. That's going to send this pair lower. Let's drop out to an hourly chart real quick just to get a feel for what it was reaching for. All right, so we had relative equal lows in here and a rejection block there. So let's put our annotations. There you go. Give them the business. Okay, you can see the bodies of the candles respecting the rejection block in here, and then sent it higher. Now it can be rebalancing here to go again more meaningful swing below these equal lows. Sell side liquidity still resides down there. I like how we had 1, 2, 3, 4 times sending it higher into this decline. So every time a high was taken, traders that were looking to go short were neutralized. They weren't allowed to participate in that short. And then today, it really fell out of bed really nicely. Again, I don't trade this pair. I use it for determining what pair I want to be trading. And obviously, you can see I was working with euro dollar. Did some work with it in the London session. I did some work with it in the New York session, coaching my oldest boys. But I'm going to end this video with a little bit of a recap and showing of what I was looking at in euro when it was trading. And I did a practice session with my sons watching so they can get a flavor for all the movement in here. Now, it's not a lot of movement, obviously, but it was over 25 pips. So something that I'm coaching you all to look for and strive for as a realistic weekly objective, to try to do that every single week and get it by way of either daily, 1 trade per week, 2 trades per week, or whatever, or as a cumulative net gain by the end of the week of all your trading to show 25 pips gained. Then you can see explosive growth from there. 25 pips is the first hurdle. When you can get to that every single week and have commitment to say, okay, I'm going to take this, once I get it, stop trading, and then build your self-control, your patience, and following rules, which is imperative for trading, because if you don't have rules, you're going to be doing things that you're not supposed to be doing at times when you're not supposed to be doing it. Okay, and that's what we're trying to teach you here. Trying not to do those types of things. But real quick, I went short in here and wanted to see it run below the lows. We got that, close up this in here, and I offered the opportunity to see if it can get down there, and I had it 117.95. But once it got down to here, and it was time of day, which is London close, so we had two things meeting together. Okay, the London close time frame and price. So when both met, time and price, that's usually the time when you want to get out of the marketplace and move to the sidelines. And then we had this retracement, and it reached for this area here. So the consolidation is part of the market profile and general commentary as I gave the last couple of days. And then specifics, you saw me working with that in terms of the recording. As you can see, it's also not that replay thing here, which when you click on that, my understanding is if you click on that, it doesn't even give you the countdown to the bar's close, because it gives you the entire bar at one time clip, okay, where you can watch in my recordings when I'm doing my practice sessions. That entry is made during a live market environment. I show the time down here, and I click the count, the little thing in my laptop's corner. It tells you the time, so that way when you can see the time here and you can see the time down here, I always do that. That way you can clearly see that it's a live decision. It's not something that's had the benefit of hindsight. So hopefully you found this insightful. Until I talk to you tomorrow for the week-ending edition of the SAT Mentorship, I wish you good luck and good trading.